President Goodluck Jonathan yesterday did speak about plans for financial inclusion for Nigeria. We do have the Central Bank Governor on the line to give us some perspective on that move. Central Bank Governor Sanusi Lamido Sanusi, it's great to have you on the show today. And of course, we do know that the Central Bank is the key institution driving the financial inclusion strategy of the government. Can you just talk us through some of the key objectives of this plan?
Well, thanks, Wole, and thanks for having me. As you do know, financial inclusion basically covers a broad range of issues. We're dealing with ease of access to financial products, the usage of those products. These products need to be designed according to need, and they need to be available at affordable cost. The major concern we've had over the years is the very, very low rate of penetration of financial products in the Nigerian economy. If you look at the reports of EFINA, for example, 70% of adult Nigerians are unbanked, and over 53% do not have access to any form of financial services. And therefore, it's extremely important for financial stability and for development that we take this seriously. And we were part of the Maya Declaration. We made a number of commitments, and we're trying to fulfill those commitments.
I know, speaking to some bankers earlier, the Central Bank is already engaging the banking community on this plan. Can you just talk us through some of the priorities at this stage in terms of that plan?
Well, we've been implementing this over the last 2-3 years. If you look at everything we've done with mobile payments, for example, the license of mobile operators, if you look at the Cashless Lagos initiative, which we hope to roll out to the rest of the country, if you look at the new tiered KYC requirements that we have released to the system, and now we've got draft frameworks for consumer protection and financial literacy. So in a sense, even while the strategy was being written up, we were in implementation mode, and the banks have keyed into this. But obviously, financial inclusion goes beyond the banks; it goes beyond the central bank. It is something that needs to address the demand side problems, such as the lack of jobs, the lack of regular income, the lack of literacy, the broken value chains, as well as the regulatory side around cumbersome KYC requirements, for example. And also the supply side, things like distance to access points and the appropriateness of the products that are designed. So the banks themselves need to understand the markets and also key into existing structures that are informal and see how they can adapt them rather than try to convert people wholesale to a new way of thinking.
Now, of course, technology is a key enabler for this, for the movement of many of these initiatives. Can you just talk us through some of the should I say, the experience you've had so far, especially with mobile payments and mobile money, and the challenges that we may see coming to the fore as we continue to broaden this financial inclusion strategy?
Yeah, I mean, technology is basically one major area that really highlights the importance of basically a multi-stakeholder approach. I'll give you a simple example. We have cables from MTN and Main One in Lagos. So having done all the work to bring bandwidth from Portugal to Lagos, we're having serious problems simply getting bandwidth to the hinterland. Yeah. We've got all sorts of stakeholders. People are talking about right of way. Sometimes it's the state government, sometimes it's the federal government and the Federal Ministry of Works. And when the technology companies lay down cables, people sometimes hack into them, break them, and basically destroy those cables, and there's very little security, just like they're doing with the pipelines. So the whole idea of how do you define what is critical infrastructure? How do you get a network and bandwidth availability across the country? How do you protect those infrastructure assets? Now that goes beyond the banking system. The second thing is this whole debate over whether these mobile payment models should be bank-led or telco-led. Yeah. We have taken the position, at least in the short term, that we'll start with bank-led models. The telecoms companies are sulking instead of basically giving us cooperation and then getting us to, as we learn and as we see the risks and understand to manage the risks, begin to expand this model and use their agents, and therefore getting cooperation from some of the key players is difficult. I've got to find ways around that because at the end of the day, we have to take decisions as regulators that we think are in the best interest of the banking system. The third is, of course, maybe we have overestimated the or underestimated the difficulty of moving from just having a mobile phone to being able to read and use it and make transfers. It's one thing to have a mobile phone and be able to make a phone call. It's another thing to learn how to make payments. You've got language issues. We had the experience with say, fertilizer payments when we tried to do that with farmers in some parts of the north. We found that some didn't have mobile phones, and those that have mobile phones don't understand English, and therefore you have this product and they couldn't even read it. And that's just what is maize, what is sorghum, what is rice, is it 2 kilograms, 1 kilogram? And we had to then, in some cases, go back to using vouchers for this farming season. But the important is that as we implement this, we learn lessons. As we learn lessons, we try to see how we can address those problems and how we can move forward.